Ladies and gentlemen, good day, and welcome to the Finkurve Financial Services Limited Q4 and FY26 post-results earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Smith Shah from Adfactors PR. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us on the Q4 FY26 earnings conference call of Finkurve Financial Services Limited. We have with us the company's management team. Before we begin, I would like to remind you that certain statements made in today's discussion may be forward-looking in nature and may involve certain risk and uncertainty. A detailed statement in this regard is available in the Q4 and FY26 investor presentation that has been uploaded on the stock exchange. I now hand over the call to Priyank Kothari, Executive Director, to begin the proceedings. Thank you, and over to you.
Good afternoon and welcome everyone, and thank you for joining us again. On our previous earnings call, we had outlined our approach to building Finkurve as a technology-enabled, risk-first gold loan franchise with a strong focus on disciplined growth and governance. Over the past quarter, our effort has been centered on executing this strategy in a consistent and measured manner. We are pleased to share that during the quarter, we crossed a significant milestone of 1,000 crore in AUM and closed the financial year on a stronger and a more stable note, supported by steady business momentum and continued focus on asset quality. We also received a credit rating upgrade from Care Ratings and Informatics, which reinforces external confidence in our operating framework and growth trajectory. Importantly, asset quality metrics have been stable in line with our internal benchmarks, and we are seeing improving access to diversified funding sources following these upgrades. During the quarter, we have taken a few important steps to further strengthen the platform. First, we have initiated a co-lending partnership with Godrej, with approximately 21 crores of AUM already built under this arrangement. This partnership also reflects growing institutional confidence in our underwriting and operating framework, and we intend to scale this channel in a calibrated manner. Second, during the quarter, we also initiated cross-sell efforts through the launch of the Arvog Wellness program for customers. As part of this initiative, we have issued over 150 policies during the initial phase of rollout. Given that the program is still at a very early stage, it would be premature for us to provide any meaningful guidance around scale or contribution at this point. We have also introduced another cross-sell product offering during the quarter, details of which we intend to share more comprehensively in the coming quarters as the rollout progresses. Strategically, our objective is to gradually build a stronger fee income and cross-sell franchise around a core customer base in a calibrated and customer-centric manner. From a regulatory standpoint, during the year, we have transitioned into a middle layer NBFC and have aligned our systems, processes, and governance framework to be fully compliant with the applicable regulatory requirements. We view this as an important step in strengthening our institutional foundation as we scale. From a broader macro perspective, the quarter also witnessed elevated global uncertainty, particularly arising from geopolitical developments in West Asia and volatility across commodity and financial markets. While such events can impact overall market sentiment and funding environments in the near term, we are pleased to note that our business operations and portfolio performance remained stable during the period. In fact, in uncertain environments, secured and short tenure lending products such as gold loans continue to demonstrate resilience, supported by prudent underwriting and strong collateral structures. Overall, our approach to growth remains unchanged. We continue to scale the business in a manner where systems, controls, and underwriting discipline remain ahead of growth, while selectively building capabilities that support long-term scalability. We remain highly focused on operational excellence, customer service, and asset quality, as we believe these are the foundations on which enduring lending institutions are built. We are also pleased to share that we have closed the financial year on our strongest note so far, with continued improvement across key businesses and profitability metrics. As we move into the new financial year, our focus will remain on building the organization steadily, quarter after quarter, with same emphasis on disciplined growth, execution quality, and long-term value creation. With that, I will now request our CFO to take you through the financial performance for the period, after which we will open the floor for questions. Thank you.
Thank you, Priyank, and good morning, everyone. Thank you for joining us. This is Akash Jain, CFO of the company, presenting the Q4 numbers to you. Our Q4 numbers have been one of the best performing quarters, wherein our AUM on a year-on-year basis has grown by 149%, from 439 crores to almost 1,096 crores. Our branch network has increased from 73 to 105, adding 32 branches in a year. Our total income has grown by 71%, from 40 crores to 69 crores, the quarterly income, and the PAT has grown by 105%. Our NPAs have been at a record low level. Gross NPA has been at 0.13% and net NPA has been at 0.09%. We have maintained a very healthy CRAR. Capital adequacy ratio is at 30.96, almost 31%, and our debt to equity is at 2.42%. This gives us enough room for us to fuel our growth in this financial year by leveraging our book. Our liquidity position as on the balance sheet date was pretty strong. We closed it with 102 crores cash and cash equivalent balance. These are the key critical numbers, for the quarter. Apart from that, we have achieved key milestones, as Priyank has highlighted that in Q4 we have already transitioned to a middle layer NBFC, crossing 1,000 crore asset base. We've crossed 100 branch network there. We have added Godrej as our co-lending partners, and we have received rating upgrade from the credit rating agencies like StockCare and Informerit. These are the key critical updates. Now we open the floor for the questions.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star, then 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants, you are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to all the participants, you may press star and 1 to ask a question. We will take the first question from the line of Sandeep Kapadia from Four Stones Advisors. Please go ahead.
Hello?
Yes, you're audible. Please proceed.
Yeah, hi. Congratulations to the team, Priyank and Naveen. Wonderful numbers, superb execution so far. I had 3 questions. If you can please elaborate on it. One is, what efforts you are making for the physical rollout of the branches. Kind of what is the timeline? What is our ambition? What kind of numbers are we talking about? Second is, can you please elaborate how we use technology at our branches? And the third is, what efforts you are making to decrease the cost of the funds?
Yeah. Thank you, Sandeep. So this is Naveen Kotala, CEO of the company. So I'll take the question step by step. So regarding the physical rollout of branches, so during the last Concall also we have committed that we will be growing by 50% our branch network, 40 to 50%. So that plan is still on. So we are continuously doing the same thing. We typically take around 30 to 45 days to open one branch. Technologically, we are, we don't need to do much to open a branch. So primary
So more constraint is there on the availability of manpower rather than, technology and physical infra. So typically it takes 30 to 45 days, and the plan is as per the AOP. Regarding the technology usage, so we are changing the entire onboarding journey of the customer at the branch level. We have started efforts towards that. So we are upgrading technology. So the primary expectation is to reduce the TAT of the entire journey of the customer. So at the HO level, we have reduced with the use of AI and automation. We have reduced TAT to a lot extent. But at the branch level, the major gain is yet to be seen. So in this financial year, we will see a lot of use of technology at the branch level. Okay, and at the for the cost of fund, I would like Akash to tell.
Yeah, thanks, Naveen. So on the cost of funds, see, last year was the year where we had significantly leveraged our capital by raising almost 677 crores, both from capital markets and financial institutions, which includes all categories of lenders, right from PSUs, private banks, SFBs, and NBFCs. Right. So our cost of funds, with every borrowing, our endeavor was to make our cost of funds better, and that shall continue in this financial year as well. On the overall outlook side, the momentum is upwards, where the industry is expecting the rise in cost of funds at an overall level. But at the company level, we should be in a position to maintain or bring down our cost of fund by changing the borrowing mix, obviously by adding more private banks and PSU players, which can offer us a better cost of funds. Plus, the co-lending partnerships that we have done is already at a better cost of funds. So, having all of these in place, I think we should be in a position to bring down our cost of funds in this financial year.
Okay, great. Did you talk about the number of branches that we are targeting?
Yeah. So I mentioned 50%. So we closed the year at 105 branches. So you can expect around 50% growth.
Understood. Okay, great. And I guess our cost of funds question in a way will come down if our credit rating improves. So any efforts that we are making in that direction?
Yes, see, credit rating is, again, we received an upgrade in the month of March, from a triple B to triple B plus category. Journey from here to an A- category, it's a journey that comes with the size of your asset base, your ROE kind of a numbers, and multiple other factors here. So, but it's a journey. We should not and we cannot expect this immediately in this financial year. But if we achieve more than what we envisage in this financial year, probably at that point in time we can expect. So so for this financial year at least, what we are saying is, if we consider ourselves as a triple B plus category player, we've already got the best cost of funds, and we'll try to bring it down with a mix of PSU players and co-lending partnerships.
Okay, great. Thank you.
Thank you.
Thank you. We will take the next question from the line of Tanya Kothari from AUM Capital Market Private Limited. Please go ahead.
Firstly, congratulations to the management team on delivering a strong set of numbers along with healthy traction in gold loan business. I just had a couple of questions on business loan growth, on this business and industry outlook. Sir, you have reported an off-book AUM of 21 crore out of total AUM of 1,096 crores. Why is the co-lending contribution currently less than 2% of AUM, and what is the target for FY27 and 28?
Yeah. So basically the co-lending partnership started. First of all, just to give a brief background, so co-lending, there is a change in guidelines in co-lending. So the entire industry moved to CLM2. Okay. Sorry, CLM1. So earlier it was CLM2, now it is CLM1. So that CLM1 implementation industry-wide took some time. So we were kind of early movers there, and we started the partnership in the last quarter. We went live with the partnership only in the last quarter. So that's why this is the first quarter, and in the middle of the quarter we started. So for the first month, the number was this. So you will see a steady growth in these numbers substantially in this financial year. So we aspire to achieve a 20%, 20% of the overall portfolio in co-lending by the end of the financial year. So this is our aspiration. Though it is early to say, but we aspire and make efforts to reach that stage.
Just following this question, sir, you mentioned Godrej as co-lending partner, and I think RBL is also one of the co-lending partners. So recently there was an, India and UAE recently announced some $5 billion investment, out of which $3 billion will go to RBL Bank. So do you see strengthening of, because of this growth opportunity for Finkurve in terms of co-lending, funding access, or expansion with secured lending products such as loan on this?
So we continue. See, apart from we have 3 partners as of now. So RBL was one of them. Godrej is one of them. We have also onboarded one more partner. So we continuously liaison with our partners and increase allocation to co-lending. So there is an ongoing process. So overall, we don't commit any partner specific numbers, but overall on the co-lending bit, we aspire to reach a 20% of the AUM number. Okay, so individual partnership level things vary depending on the product mix, risk profile, things like that.
Okay. So just another question. RBL penetration in agricultural loan segment. Can you tell me, are you giving some specific customized products to the farmers, or how is it in agricultural loan? Can you give me some number on that? And also in SME.
Yeah.
Hello.
You're audible.
I was telling RBL penetration in agricultural loan segment, sir. What is the amount and how do you customize?
So I'll tell you. So on the agriculture loans, so first of all, earlier there used to be a practice where NBFC used to build a PSL book and banks used to buy that for their PSL allocation. Now that has stopped, going forward. So independently, RBL building a PSL book may not, yield any, a positive outcome in terms of P&L. So now, as per the new guidelines, PSL book only can be built via co-lending. Okay, so we are in touch with, and that too, PSL is only beneficial for a bank. So we can only do, agri loans for a bank to get some benefit to the P&L. Okay, so with our new partners, we are in talks with launching a agri product specifically. So that we will see over this financial year. So specifically, independently as an NBFC, there is very limited benefit to do a agri product. Okay, so agri product can only be done in partnership with a bank in co-lending arrangement. So that talks are still going on. So once they give us the specification, we will launch that product in our branches, and then we will be able to give these specific numbers in coming quarters.
Okay, sir. So the industry for gold loan is around 19 lakh crores, and it has grown around, say, 50% YOY. And I see Finkurve market is actually concentrated in South Indian markets. So what is the kind of South Indian market on a whole, like where the Finkurve is, looking for opportunities?
So the 19 lakh crore organized market, if you see, majority still lies with South India. So on a YOY basis, if you compare North India and South India, even though you will see growth in North India more, But, quantum, the base of South India is so high that even if the growth number is limited, but the number of customers and the tonnage growth is very, very high in terms of absolute numbers. Okay. So, our focus was, we started with South India. We are, as long as there is room for growth, as long as we don't see any saturation in our catchment areas, we will not diversify to other geographies. Though we are looking, in this financial year, we'll explore other opportunities which are nearer to our catchment areas. For example, Orissa and, from Karnataka, if you move out, then maybe Goa or Maharashtra. So these are the places which we will explore. But as of now, we are going very strong. We don't see any saturation in the growth in our existing region. So we will fully exhaust that and then move to a new geography.
Okay, sir. Thank you so much. That was so helpful, and best wishes for your next quarter, sir.
Thank you.
Thank you. We will take the next question from the line of Anirudh Sharma, an individual investor. Please go ahead. Anirudh, you may proceed with your question. Anirudh, you may proceed with your question, please. Due to no response, we will take the next participant. We have the next question from the line of Vishal Darji from NVS Brokerage. Please go ahead.
Hello, sir. Thank you for the opportunity and congratulations for a good set of numbers. So my first question was, given the strong Augment ecosystem that you have, so what type of financial benefit is directly visible in Airwork numbers? Like, is there any lower sourcing cost, better customer acquisition, lower fraud rates, or better collections that you can expect?
So firstly, thanks for the question. So Augment ecosystem gives us a lot of tangible and intangible benefits only. So when you ask for tangible benefits, of course, the Augment lineage experience and the background gives us a lot of weightage, when we are talking to a larger set of banks when it comes to PSUs, NBFCs, and that reflects into a better cost of fund if you compare NBFC of our size vis-a-vis, the other NBFCs. That is one benefit that Finkurve has been able to extract. When I talk about intangible benefits, of course, when the Augment ecosystem lends its name and brand to us, it of course gives us a lot of weightage in the entire gold ecosystem. We're probably one of the largest gold ecosystems that have extended the business to and started gold loans. So I think that again gives us a lot of weightage. So if you put intangible and tangible benefits together, I think Finkurve stands to benefit a lot in terms of cost of funds, in terms of getting access to the right set of institutional investors and lenders, get the benefit of the brand that Augment has created. So all in all, these are the benefits that I see that Finkurve tends to get.
Okay, sir. So given that the benefit you have from this ecosystem, I would like to ask another question. Like, how does the management see the next 3 years of the company, like in terms of AUM growth, the ROA, ROE of the company?
So, in terms of AUM growth, I think in the last Concall also we have, for this financial year, we have given a guidance of 40 to 50%. So year on year we will be continuing as per the guidance, but we internally aspire to reach higher AUM growth, but we are very cautious in terms of asset quality. So whatever growth we aspire to achieve, it will be risk-adjusted growth. So we'll never compromise on the quality of the asset we are building. That has been the culture of the company since the beginning. We'll continue that. So we aspire to grow, much higher. But as per the guidance, we are giving 40 to 50% year on year. Okay. In terms of ROE and ROE, so right now, we are very, very young NBFC. We're growing very fast. So these numbers should be looked at a steady state basis. So we aspire to, again, on the ROE and ROE basis, for the next, 5-year horizon, we will aspire to reach 17 to 18% ROE, and ROE is around 3.5 to 4%. So those are the benchmarks for us on the long-term, long-term horizon.
Okay, sir. Thanks a lot for the answer.
Thank you. We will take the next question from the line of Varun Trivedi from Sharp Advisors. Please go ahead.
Hello. Hi, good afternoon. So, sir, you are sitting on 102 crores of cash and cash equivalents, which is about to 8.3% of total assets. So that's a healthy cushion, but also a meaningful drag on ROA at current yields. So I just wanted to ask that, is this a deliberate buffer given the pace of growth, or do you plan to deploy this more aggressively into the loan book in next quarter?
Okay, so thanks for asking this. The idea was to, generally, if you see, April is a season of slack. It's a slack period across the industry where, the leverage isn't enough, the borrowings isn't enough from the banks because it's a transfer and transition phase for the banks as well, book closure phase. Hence, to have that buffer in place also helps us in keeping the momentum on uninterrupted supply of capital to the business, right? And that is why it was more meaningful for us to, have that kind of a balance at the beginning of the year. At the end of the year.
Okay, understood. And I have another question.
The entire balance is deployed again in, the loan book.
Okay.
Yeah.
Thank you.
Thank you.
Thank you. We will take the next question from the line of Ronak, an individual investor. Please go ahead. Ronak, you may proceed with the question, please.
Hello, am I audible?
Yes, you're audible.
Yeah, so I just wanted to know what is the profit guidance for us for the next 2 to 3 years? Hello?
Yeah, Ronak. So we have been given guidance on the AUM as well as ROE number. So we generally don't have a specific guidance on the profit. But you will see it growing. It will be continuously in the growing phase. But if you look at AUM growth, you cannot tie it up to the AUM growth because profit has its own adjustments and things like that. So as far as AUM growth and NPA numbers, we are pretty tight on that. So there is no surprises we will get in terms of profit. But exact number on the guidance we may not be able to give.
Is there any AUM target that we have in the next 3 years? FY29, I think we had mentioned we have a certain AUM target, right?
Yeah. So immediate, high AUM target is around 5,000 crores. So that we aspire to reach maybe in next 5 years. By 2029, we aspire to reach about 5,000 crores. That is our immediate target. As I mentioned earlier, we are cautious in terms of asset quality. So whatever growth we do, it will be risk-adjusted growth. So it will not have a drag on profitability and things like that.
Okay. And in terms of the number of branches, what is the existing branch count and what is the target for branch openings for this year?
So the existing branch count is around 105. So we have given a guidance of around 50% of expansion in this financial year.
So we are looking at about 150 to 160 branches in this year?
Yes.
Okay. And this will, how much impact would this have on our, what is the cost of each branch, like the initial capex cost that we have to bear?
The typical capex is around 14 to 15 lakhs. That's the capex.
Okay.
And OPEX is around 2.5 to 3 lakhs.
per branch?
Per branch, yes.
Okay. All right. Thank you.
Thank you. We will take the next question from the line of Rahul Ahuja from Finwealth. Please go ahead.
Hello. Yeah, I have two questions. My first would be, if you had to paint a picture of Finkurve in FY29, what does it look in terms of AUM, branch count, ROE, and geographic presence? I'll ask the next question after this.
See, exact numbers will be, too much forward guidance. But, we would like to see a serious player. We would like to see ourselves as a serious gold loan player. So one thing is for sure that we will not be one of the, the gold loan will not be one of the products in our entire AUM. It will be majority. Lion's share will be gold loan. So you can consider us as a gold loan player, gold loan NBFC. Okay, even after, even at 2029. In terms of AUM, we aspire to be more than 5,000 crores. Okay, and what was the other thing? In terms of number of branches, right? Yeah, so it will be so branches. That is a function of AUM. So we would like to improve the productivity of existing branches. So that exact number I may not be able to give. But continuously, if you look at our numbers also, continuously we are increasing per branch productivity. So we would like to achieve this number with minimum number of branches, with the use of technology and things like that. So such forward time period, I may not be able to give an exact branch count. But on the AUM, that's what we are aspiring to be.
Okay, understood, sir. One thing is your lender profile shows both bank and NBFC partners. So with RBI's evolving stance on NBFC to NBFC lending, are you seeing any tightening from NBFC lenders? And also, how diversified is your top 5 lending concentration as of now?
So in terms of our, NBFC lending, so far, what we have borrowed comprises of very smaller portion on their overall AUM. And, every NBFC has their own, NBFC quota, lending to NBFC quotas. And our borrowings have been, in the ticket size has been in the range of 20 to 25 crores, which is a very comfortable, ticket size. For this financial year, as I said, the focus is more on the, private banks and PSUs, which has a larger appetite and a larger ticket size there. So we don't see a constraint there for us. And our concentration, so we've added almost, 17 new lenders in this financial year in terms of banks and NBFCs. And we've also raised it through capital markets. So if you see our, NCD share is almost 35% of our overall borrowings. So our borrowing profile is pretty diversified, in terms of, each of the categories of the banks, NBFCs, and also raising it through capital markets. Plus the co-lending is something that we are, envisaging in this financial year. And as Naveen has also highlighted, our idea, or we aspire to achieve 20% of our overall AUM through co-lending. So we can see the entire journey, in this financial year.
Okay, thank you so much, sir. That was all from my side.
Thank you.
Thank you. We will take the next question from the line of Ronak, an individual investor. Please go ahead.
Yeah, hi. I just wanted to ask, what is our current weighted average cost of borrowing, and how do we foresee this? Because we were expecting some credit rating improvements for our cost of borrowing to come down. So has any progress been made on that front?
So Ronak, as I said earlier, that our cost of borrowing, so last year we've borrowed very significantly from banks and NBFCs, and our cost of borrowing with each borrowing that we have made has improvised, right? So we've diversified ourselves there. Cost of borrowing for this financial year, we have already gotten the benefit of the credit rating, and the cost of borrowings would be around what we have already achieved. So 11.2 was the number of last financial year, the average cost of borrowings that we have had. In this financial year, we are aspiring to maintain the same number because the overall outlook per se, due to the macro factors, the outlook per se seems to be, uptrending the cost of funds.
Okay. But assuming that, the macros remain the same, do we expect our cost of borrowing to come down because of our credit rating improvement?
So credit rating improvement has already been factored in. Now the next, moving to the next bracket is a journey, right? BBB plus to A minus is a journey. It comes with a lot of factors, like the AUM size, the, ROA, ROE numbers and multiple other factors. So, expecting this immediately in this financial year, we can only expect, but what we have envisaged is the steady state cost of borrowing. Obviously, our cost of borrowings would come down at an overall level because if we are incorporating 20% share of our overall AUM as an off book, which has already come in at a better cost, then, we should improvise on our overall cost of borrowings. Plus the weightage of the private banks and PSUs have also been added in this current year's AO.
So what would be a fair assumption for this financial year? Would it be at 11 point or slightly higher?
We can consider the same for now.
Okay. All right. Thank you.
Thank you.
Thank you. We will take the next question from the line of Vatsal Cheda from Phillip Services. Please go ahead.
Am I audible?
Yes, you're audible.
Yes.
Please proceed.
So my question is more to do with the equity raise plan. So currently the net worth stands around 346. So as we intend to grow our AUM to 5,000 crores, wanted to know what's the plans for the equity raise. Are we in talks with any investors for equity raise? So yeah.
Sorry to interrupt in between. Vatsal, sorry to interrupt, sir. Vatsal, I would request you to please self-mute your line when the management is answering.
Sure.
Thank you. So you may proceed.
So on the equity raise side, see, for the current year, it would be too early for us to engage with an investor for the equity round because, our gearing is comfortable. Our CRAR is pretty comfortable as of now. The regulatory requirement is to have a 15% CRAR for a gold loan NBFC. We are at a 31%, almost 31% CRAR. So that enables us to, grow our book without raising further capital. Plus, as we have also incorporated 20% share of overall AUM in the co-lending proportion, which again gives us a deferment on the capital raising. So for this financial year, at least, we are not envisaging, as of now, we are not envisaging any capital raise. If the scenarios changes after, a quarter, maybe then we should take a call, after H1 as to, when should we engage with the investor.
Thanks for the reply. Just a follow-on question, like any plans for any inorganic acquisition to increase the asset size?
So see, we keep looking at those opportunities on ongoing basis. Till now, we have not found anything which is, synergy-wise, it is like so good in terms of valuation-wise also. But these options are always there, and we keep on evaluating both on the asset side and the non-interest income side. So these options are always open.
Okay, sure. Thank you.
Thank you. We will take the next question from the line of Madhira from Investo. Please go ahead.
Thank you for the opportunity. If you could help me with the fee and commission expenses remain the largest cost line after the finance cost of around 70 crores, while the fee income has declined sharply. So can you explain what is this expense? Does this include DSA payout, co-lending fee or platform cost? Or whether this ratio is expected to moderate with the scale?
See, I'll break your question into two parts. On the revenue side, the decline in fees and commission income, if you see the fees and commission, there has been certain regroupings that we have made, and the fees and commission, a portion of fees and commission, a larger portion of fees and commission has been clubbed to the interest expense as per the Ind AS guidelines, the amortized cost guidelines. Now, on the expense side, I'll tell you the overall composition of revenue is, while the personal loan book is almost 3.9% of our overall AUM, it contributes almost 30% of our overall revenue. That being the case, because PL is again a business which is in partnership with fintech for us, what is passed on to the partners after keeping our hurdle rate is what is reflecting in the fees and commission expense. So the fees and commission expense that is out there in the financial represents the outflow to the fintech partners after retaining our hurdle rate on the loan book that we have with us. On the going forward basis, as we envisage to grow this PL book in proportion to our AUM, which is not more than 10% of our overall AUM, this fees and commission expense shall grow in proportion to our AUM, as well as in proportion our revenue shall also grow in that proportion. Sure.
Got it, sir. And secondly, our ROE stand at 7.8% and ROE is at 3.2%, and the CAR remains strong with 30%. So what is that medium-term ROE target, and will the improvement be driven mainly by leverage deployment or margin recovery?
See, ROE targets, as our CEO has already mentioned, the longer horizon target, since we are a growing NBFC, we can only give a longer term targets, and in a 3 to 5 years zone, we would like to have an ROE of 17 to 18% with an ROA of 3.5 to 4%. That's the broader number that we can give you now.
Oh, got it, sir. Got it. That was really helpful. Thank you. All the best.
Thanks.
Thank you. We will take the next question from the line of Hena Parekh from Solvarian Capital. Please go ahead.
Hi, thank you for the opportunity. Firstly, congratulations on good set of numbers. I have two questions. One was on the borrowing. So the total borrowings have gone from 237 crores to 836 crores in a single year. That is like almost 3.5 times increase. And the debt to equity has also moved from 1.2 times to 2.4. So how are you thinking about the pace of leverage built from here? And on a steady state basis, what debt to equity ratio level is the company comfortable operating at?
So on the borrowing side, we were able to leverage significantly despite of the capital infusion, which took our debt to equity from 1.1 to almost 2.4x despite of the capital raise. So all in all, we have raised almost 677 crores with diversified sources of funds. We still feel there's enough room because the industry average is about 3.5 to 4x. There are players above 4x as well. But we would like to see ourselves, anywhere between 4 to 4.5x. Again, that is not again considering the off-book proportion that we will build. So that's the ideal debt to equity ratio that we would like to achieve, around 4x.
Got it, understood. And one on the operations part, so the urban ecosystem has approximately 37 million plus still gold customers, right? And that's a significant top of funnel. So what percentage of your current gold loan customers are actually being sourced through Augmont versus the branch walk-ins? And is there any quality difference between the two cohorts in terms of ticket size, LTV, or repayment behavior?
Yeah. So, Hema, we have still not leveraged Augmont, customers for the Finkurve, gold loans. So currently, whatever customers you see, those are sourced independently by Finkurve at the branch-led model only. Okay. So we wish to do that in the future. We plan to do that in future, but as of now, we have not leveraged that yet.
Oh, okay. Understood. Got it. Thank you so much, and all the very best.
Thank you. We will take the next question from the line of Rutvi Gandhi from Family Office. Please go ahead.
Hello. Good afternoon, sir. Thank you for the opportunity. My first question is regarding the NPAs. So, sir, could you give us a sense of what your overdue but not yet NPA pipeline looks right now? Hello, am I audible?
Yeah, you're audible. So
Yes.
you're asking what is the overdue and not yet NPA?
Yes, correct.
So the exact number I need to check and come back to you. Can mail on that. But on the overall NPA SN, so if you look at the NPA number, this year has been exceptionally, good on the back of rising prices and availability of top-ups and things like that. So industry-wide, if you see everybody has given a very good numbers on NPA, but we would also always feel that we should be in the industry range. NPA guidance will always give us the industry range. So and to your question of overdue but not NPA.
Yes.
So this is a ongoing process, right? So month on month we ensure that the NPAs are cleared off. Either via repayments or via auction, but auction anyways is very, very less in our case. So we usually customers clear the loans, either close the loan or repay the interest on time.
Got it, sir. And sir, I also wanted some color on your views regarding the gold prices. Since gold prices have had a very strong run lately, what is your current average portfolio LTV, and what does your stress testing look like? If gold corrects 15 to 20%, are we comfortable sharing what those scenarios show?
So we have so as of the year end, our average LTV was around 72%. That we have displayed in our presentation as well. So we are comfortable in terms of stress test of even 15 to 20% as well. So what happened if you remember last I think in last quarter there was a time when the gold prices corrected almost on a single day the fall was almost 15% sharp. But
yes,
we did not face any problem in terms of our portfolio. So the business was as usual for us. We informed our customers, did some margin calls, and even the margin call pool was not very high. So even after the price fall, we did not see any stress in the portfolio or any losses due to margins or things like that. So we keep on testing our portfolio with a 10% or 15% fall. We keep on doing that on an ongoing basis. So that's about the risk management.
Also to answer your question on the portfolio first, our stage 1 bucket still holds 99%, which is less than 30 DPD. So the entire book is pretty standard and under stage 1. A very minimal book that has been that has moved to stage 2 and stage 3 buckets.
Understood. Thank you so much, sir. Got it. Thank you so much.
Thank you very much. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference back to the management for the closing comments. Thank you, and over to you, sir.
In terms of our closing remarks, we would like to say that we continue to focus and improve and build our muscle when it comes to business, and of course our idea is to post better results quarter on quarter. So we'll end on this note, and thank you all for joining and asking us meaningful questions. We hope for the same kind of engagement in the coming quarters as well.
Thank you, members of the management. On behalf of Finkurve Financial Services Limited, we conclude this conference. Thank you all for joining with us today, and you may now disconnect your lines. Thank you.